Hello, everyone, and welcome back to the strategy stage at FTT Embedded Finance North America. I'm Lisa Moyle, Director of Strategy at VC Innovations, and I'm delighted to be joined by Michael Haney, Head of Digital Core with Technisys. Michael, today we're going to have a bit of a chat about the customizable bank and what that means. But before we start getting into the detail, can you tell us a little bit about you and your role at Technisys?
Yes, absolutely. Absolute pleasure to be here today and to be speaking with you. And hopefully this will be the first of many conversations to come. So again, my name is Michael Haney. I'm currently playing the role of business line leader at Technisys for the North America region for our business line that we call Digital Core. So Technisys is actually not a new company. We celebrated our 25th anniversary last year. But we are new to the North America region, having just entered this region about a year and a half to 2 years ago. Technisys began life in Latin America, specifically Buenos Aires, Argentina, and has spent now a quarter of a century growing throughout the region. So happy to say that we have clients and partners and offices and employees from Mexico all the way down to Chile. As we decided what our next growth trajectory should be, we decided that at least geographically, that will be North America, which for us, of course, is US and Canada. And we opened offices down in Miami, Florida, and up in Toronto in Ontario, Canada, to help facilitate this growth. We also went through Series C funding round, took in about $50 million from some Silicon Valley venture capitalists to help fund the expansion. And of course, we've been hiring people like myself over the last couple of years to really have some boots on the ground in the US and Canada in the sales function, marketing function, delivery function, and other support functions for the region. Our main platform we call Cyberbank. It has a front-end digital engagement platform. So think of this as your internet banking, mobile banking, and increasingly wiring into the Internet of Things like a smart speaker or a smartwatch, social media, messaging apps, and the like, as these channels become preferred channels, many preferred channels these days as customer behavior changes. And of course, we have a back-end processing platform, a core banking solution, which we call Cyberbank Core. So we have been happy to announce that over the last couple of years, we brought our first 4 customers live in the US and our first customer live in Canada as well. I'm a bit of an anomaly at the firm. I actually spent most of my career at financial institutions themselves, specifically Citibank, where I was based either in New York or for several years in Tokyo, with Barclays Bank out in London, and UBS out in Zurich, Switzerland. And for the remainder of my career, I've been in the software and services industry, but always focused on banking and wealth management and related industries. So that's a bit of a background about myself and the company, and turn it back over to you.
Thanks for that. That's a great introduction and a really good overview, both of you, and a sense of what Technisys does. And sounds like there's some really exciting things in the pipeline. We've heard a lot this morning about embedded finance, the opportunity, and what it means. Let's focus on the banking sector now. What is the customizable bank, and why is that important, particularly in the context of everything that we've been discussing today?
Sure. We look at the customizable bank from 2 different perspectives. The first is really what are the products and services that a bank should be launching, and how do we customize them for the unique customer segments or, in fact, individuals that will be banking with that bank. And we're seeing that there has been historically kind of a disconnect between the financial products that are offered and how customers want to utilize those products. Imagine if you didn't know banking, for example. You were new to banking because you're a teenager or a child, or you're just part of the unbanked community learning about banking services. And it's kind of up to you often to figure out how to connect your needs and wants, financial needs and wants, to the banking products that are out there. Some of them are painfully obvious. Let's say a mortgage is clearly for home buying purposes, but some of the products and services aren't that obvious. And banks have historically not been very good with education, guidance, and advice particularly when you're not paying for that education, guidance, and advice. So it's sort of up to you, the customer. And what we've been able to see as digital challenger banks and fintechs come onto the scene over the last few years is that they're starting with that question: what are the customer needs and wants? And then designing the financial services around that. So two very hot products that we're seeing today, obviously things like early wage access, sometimes called early pay, or things like buy now, pay later, are really there to address specific needs and wants of the customer rather than having vaguer products that it's not as obviously easy to determine how to utilize those products to meet your aspirations. The second way that we look at the customizable bank is really about how quickly a bank can respond to change coming from regulators, change coming from the competition, or change coming from consumer behavior changes. And a lot of times, the way they're organized, their legacy technologies, their legacy operational processes and procedures don't allow them to respond to change as quickly as they would like or as cost effectively as they would like. So one of the things that we are watching is this sort of adoption of tools, often called low code or no code tools, that make it easier for banks to change their systems, their processes, their procedures to more rapidly respond to the changes that they need to respond to in the industry. And you've probably heard a lot of the buzzwords that sit around this. It's not just about the tool set, it's also about the methodologies and procedures we use to deliver banking capabilities. So agile methodologies, DevOps or DevSecOps is now a popular term. And this whole mindset of continuous integration, continuous delivery, or CI/CD. So it's really not just about the technology itself, it's about your business processes, your internal business culture, and the methodologies you'd use to more rapidly deliver products and services into the market and shrink that whole time to market equation.
That's a great overview. And what I'm hearing from you is, this is about personalization, right? And enabling that personalization on the back end and throughout the entire organization, and having that, as you illustrated so well, that agility to respond to changes in the market, whether it's regulation or customer preferences or what have you. Now, you touched on fintechs and challenger banks doing this really well. Do you think that banks can keep pace with that? Can they respond to that in the same way that we, as you said, challenger banks and fintechs are taking that as a starting point?
Yes, and just quickly on your first point there, one-to-one personalization is the dream. Banks have made great strides in moving from a product-centric to a customer-centric mindset. And they started this journey by trying to categorize customers into various customer segments and come up with offerings in that space. Now, of course, with newer technologies, with the emphasis on data, the dream of one-to-one personalization for every customer that's out there, that's the end goal. We're not quite there yet, but we've made great strides in getting us there along that journey. To your second point, one of the advantages that a neobank or a digital challenger bank that's just come on the scene has, of course, is that they have no legacy. There's no technology debt. There's no, prior process or procedure. Incumbent or legacy banks have to go through change. And that change is changing their systems, changing their operating model, changing their organizational structure, changing their product set. And change takes time. And you don't want to do it in a way that ultimately sets your business up for the future, but doesn't destroy your existing revenue streams and your existing customer base and so on, right? So that's the advantage that the legacy guys have, is that they can build something from scratch. They can design it to be digital first, adopt the latest technology from day one, and they just don't have that sort of legacy that they have to sort of overcome. And as I mentioned before, part of that legacy is your existing business culture, your existing way of doing things. And one of the hardest things that we have is changing human behavior. I think to change a habit, for example, they say takes on average 13 weeks. Imagine if you're trying to change a big multinational bank like Citibank or HSBC, right? That's in dozens, if not hundreds of countries. How do you manage change at such scale? So that's the challenge that they have.
So putting that question right back to you, can they manage that change with these new technologies, which essentially, as you said, are going to upend the way that they've done things for a very long time?
I truly believe that they can. Most of these financial institutions are, number one, have been around for quite a long time. Several of them are approaching well over 200 years. So they have the ability to survive and adapt. They've proven that over and over again, financial crisis after financial crisis, changing customer behavior. And so banks do have the ability to survive. We don't always see them change maybe as quickly as we'd like them to, but I truly believe they have that ability to change. And often what they do is they look at what are the fintechs doing, the challenger banks doing, and then just allow them to be first mover and then adopt those things. One of the, banks do have a couple of advantages that other industries don't really have. One is the concept of trust, right? Certain brands exude this concept of trust. It's a known thing. That's a safe place to put money, so they can leverage that concept of trust. There's still in most markets there's still a lot of choice, and so customers can vote with their wallet essentially, but they still tend to move between institutions that have that level of trust. And the second, of course, is regulatory support. Often banks, of course, that are dealing with regulatory compliance look at it through a lens of cost and effort and annoyance in a way. But in fact, regulators are often there supporting the existing institutions, right? So there's that sort of concept of systemically important in a few markets, right? So we don't see some of these major players disappearing anytime soon. And that's probably a disadvantage that some of the new players have. They are very attractive from their technology. They're very attractive in terms of how they solve customer issues. They're building brands very quickly, but they still don't have the reputation, the market share, the diversity of products, and that regulatory support, that trust from the customer. The digital challenger banks still have a way to go to be able to mimic what we see the larger banks doing. And by the time they get there, the larger banks may have swallowed them up, or the challenger banks may have gone out of business because they didn't manage certain aspects like risk and regulatory.
You've given us some really important points to think about there, and clearly we shouldn't write the incumbents off just yet. The kind of narrative around trust, I think, is hugely important, and you outlined that so well. We talked also a lot about, you referred to digital first products and services, right? And we'll have heard, we've heard a lot of that across the morning. And, we've seen obviously the acceleration since the start of the pandemic of uptake in digital channels. Can you give us, some examples? What does it look like? What are digital first products and services?
Yeah. So as I mentioned earlier, two of the hottest ones right now, at least in the States, but also we're seeing this in the UK and Australia and other parts of the world, are the concept of buy now, pay later, and the concept of early pay or early wage access. Now, there are slightly different flavors of these, but they do have certain things in common. They're often very popular among people who have limited access to credit. These kind of feel like a credit product, like a small loan, for example, and they behave in that way. But we don't see them behaving like credit products in other ways, which may change in the future, such as requiring access to your credit score and providing history of payment delinquency back to the credit bureaus. So these are examples of you're solving specific customer needs at the point of need, at the time of need. And this could be, for example, an individual whose paycheck doesn't quite stretch the full 2 weeks, and so they have that ability to get paid a couple days early. The usual rule of thumb is it's 2 days earlier than your normal paycheck, but we've seen different models out there as well. And that allows you to get access for the work that you've done. And we're probably going to continue to see this evolve, right, where you're getting paid. Technology is going to allow you to get paid for every hour, every minute that you work instantaneously. So this could be, the beginnings of just a whole different way of how we pay our employees and how employees receive their income. And then buy now, pay later is similar, right? We've seen a takeover of the credit card industry and from a volume perspective by the debit card industry, We know that millennials and Gen Z, for example, here in the States prefer paying for things with a debit card over a credit card. Buy now, pay later is typically linked to that debit card scenario. Not always. There are credit card models out there as well, but debit card is the fastest growing one. So we're seeing that sort of payment choice behavior switching. They're attracted to the fact that these buy now, pay laters act like installment loans with a fixed deadline, right? So there's that temptation there to continue revolving your debt like a credit card has at very high interest rates that credit cards have, that temptation is there, and that can put you in a very negative financial situation, and you're less likely to have that with a buy now, pay later. So you still have the need, which is I can't afford the full purchase price of this item at this point in time. I want to be able to spread my payments out, but I don't like the risk of a credit card. Maybe I wasn't approved for a credit card, or I don't like the risk of potentially going into debt for very long periods of time at high interest rate. So these are just two examples of digital first products. I would add to that when we say digital first products, it's not just about these uniquely combination products that are addressing specific consumer needs. It's also about thinking through that entire life cycle of the product, right? How did you onboard the customer and open that account? How do you do data servicing in a digital way? We need to kind of digitize the entire customer journey and product journey throughout. And again, that's some of the advantages that these fintechs have, or the challenger banks have, because they've been able to create that end-to-end journey in a fully digitized way that some of the legacy banks can maybe launch the product, but you still have non-digital account opening, account fulfillment, account servicing type of scenarios. So we have to think of digital first from a product perspective and also a journey perspective.
You've given me so many things. I could talk about this for ages, Michael, because there's so much in there. And I think, also wrapping in the behavioral issues, will the expectation change along with these end-to-end digital experiences that people, as you said, will expect to get paid almost immediately rather than in monthly arrears for their salary, which is a complete mind shift when it comes, I imagine, both to the way people manage their money and the way that they need to be serviced.
That's right.
Just to add on to that. Yeah.
I was just going to say, just to add on to that, we often talk about the Uberization. This is kind of probably an abused phrase by now, but these kind of gig economy workers are setting the expectation for other industries, including banking, right? So, being able, in an Uber scenario, you get paid immediately for that ride that you just gave that passenger, or you get paid immediately for the food that you just brought from the restaurant to the customer. That concept of being paid immediately for work done, I think, will continue to permeate throughout the industry and really upend the whole employee payment space, right? And that concept of, everything in our lives is becoming on demand, real time. And that whole philosophy, whether it's about paying your salary or other aspects of the banking industry, is going to permeate all the way through.
Yeah, I think you've pointed us towards something that merits a session in itself. So no doubt we'll be picking up on those themes in future. You've been speaking a lot about, the ways that fintechs and challenger banks can respond and capitalize on these trends, whether technology or behavioral. What advice would you give to banks, incumbent banks, and perhaps even the new challengers of today, who we may consider the incumbents of tomorrow, to future-proof their businesses?
Yes. So that's a tricky question that goes probably beyond just the customizable bank theme. There's a couple other themes that we monitor here at Technisys. One, which is obviously part of this conference today, that concept of embedded finance. We like to call that the connected bank. And there's a few sort of ways to look at this, right? So open banking is obviously something that in the UK and Europe really got started opening up data and functionality through the APIs and being able to allow the customer to sort of own his own data and move it to the player of choice, whether that's another bank or a fintech or some other kind of provider. and that whole technology revolution around API and microservices, enabling that whole thing. So open banking is sort of a catalyst that began largely in the payments world, but has expanded to other parts of banking and financial services. And then the next sort of journey around that is what I'll call the banking as a service, right? We have to be able to allow banks to open up their services to other players. Fintechs are the most obvious example of that. It's a whole new revenue stream for the banks. Of course, they still have to manage the risk and regulatory aspects of getting into this banking as a service game. But we're starting to see this permeate not just smaller banks in the US, who were kind of the first movers in this space, white labeling or private labeling their services for the fintechs. But we're now also seeing larger banks, the Citibanks, the JP Morgan Chases, the Bank of America is getting into this game, and often working with a big, what I call big tech instead of fintech, right? The Google, the Apple, the Amazon. The next wave of this is what we call the embedded finance wave, which is really about how do I plug in banking and other financial services to non-financial institution brands. Travel and hospitality, e-commerce and retail tend to be the most popular at this point. The ability when booking your airline and being able to buy travel insurance immediately, or the one that we're all familiar with, right, is you're shopping online and I want to be able to pay for the goods in my shopping basket. That's been around for a while. But you can start to see there's going to be opportunities for lenders. There's going to be opportunities for insurance companies, obviously opportunities for payment companies, that you really want to not interrupt what you're doing, whether it's online shopping or any other kind of activity online that requires that lubricant, if you will, of financial services behind it. And so embedded finance, we're going to start to see your bank's brand embedded into the Walmarts, the Amazons, the American Airlines, the Hilton hotels, and so on and so forth. So we're going to start to see financial services move way beyond the bank's own channels, right? The bank's own branches or the bank's own website, and really become embedded in the fabric of the industry.
And picking up on that notion of being embedded, outside of the institution, obviously, which pulls together a lot of the things we've been discussing this morning, there sounds, from what you're saying, this is an opportunity for banks, but also there's a challenge in there in that perhaps they're losing that first touch, being that first touch point of the customer.
I would agree with that. There's not necessarily anything wrong with that. Banks will have to kind of balance the role of being, in a sense, a utility, much like electricity or gas in our homes, right? That every home has the luxury of having these things, and we're able to dial up and dial down and be charged accordingly. But we don't tend to think about it day in and day out. We don't tend to think necessarily about our utility brands and those types of things. So there is a real chance that the bank brand will not be as in the forefront as it once was for transactional banking. But I think banks are smart enough to realize they need to move beyond just being better at transactional things, which are becoming highly commoditized and lots of revenue margin pressure, and into this world of, again, education, advice, and guidance, right? The world of personal financial management, or PFM technologies, is really taking off. The ability to mine your data and provide customized financial services and advice to you. I think that's where banks are going to go next. And they're going to allow the sort of historical transaction processing to be that utility. There's still money to be made there. There's still value to be added there. But that doesn't require your brand. Your brand is only a hit when something goes wrong with that, right? But if you can be there as a trusted partner to your client, and obviously that means in a digital way going forward, to be that trusted partner to monitor financial health, to help you define and achieve your goals. I want to send my kid to college. I want to buy a house. I want to retire, and be able to educate you about the risks of credit and all that kind of thing. That trusted partner is where banks are going to go next, and that's where their brands need to go as well.
That's really interesting. So that goes back to what you said earlier about leveraging that trust that they've had across many, many years. sometimes generations within the same family that banks have in relation to their customers.
That's absolutely right. I mean, but trust is pivoting from, is this a safe place to store my money? Back, when physical cash was the thing, and then the banks had vaults and safes and all of that. Obviously, there's still a bit of that there in the digital world, right? With information security, customer privacy protection, and those types of things. It's obviously still there. But that trust is now going to come from, are you giving me the best advice? Are you helping me manage my finances day to day and not let me go into debt or miss payments and the like, right? So trust needs to come from other sources than what it traditionally did.
And finally, Michael, picking up on something you said around, this kind of evolution towards embedded finance, where things are contextual and the customer will access what they need in relation to what they happen to be doing at the time. And you mentioned, the bringing together of banks, big techs, but also retailers, travel companies, and so on. If you were looking ahead and thinking about this, and you've touched on it a little bit, but who will win the heart and mind of the customer then? Who is their, allegiance, their loyalty, their recognition? Who is it going to be with, kind of among that group? And I have to say, in terms of the audience today, they're all represented here. So I'm sure they'll be interested in hearing what you have to say.
I think there's room for many of these players to win. Win will be defined differently by each of them. And I also will caution you that it will depend on the market, right? So, for example, as I discussed, we are heavily embedded in the Latin American market, and now we're in the North American market. In other countries outside of the US, for example, there's still less of an issue with conglomerates having a banking subsidiary. And those conglomerates can be in the retail space or the telco space or any kind of industry. And they're going to win because they have all of the things you're describing, right? They have the bank, their own bank, which they can then embed into their other non-banking brands as well. In the US, it will happen more through partnerships, as we're seeing. And they will have to play off of each other. But I think what's most important is that banking is going to be embedded in the fabric around us. That means that your bank's services could be embedded in the other services you use, whether that's a utility company, a telco, a retailer, et cetera. But it also, we have to look at it from a channel perspective. One of the themes that we watch out for is that conversational bank theme, that people are going to want to interact with their bank in a more natural human way. That means voice and text, as opposed to filling out forms and pushing buttons. So as that conversational trend takes hold, we're going to find that we're doing our banking through our smart speaker, our smartwatch. We're doing banking on the go as we travel, as well as at our home. So that means that that requires an interaction, right, with the big tech companies like Apple, as well as the bank behind Apple. Apple probably has no intention of becoming a bank, at least in the US, and we'll need banking partners to pull that off. But Apple's going to be supplying a lot of that front-end technology. I personally have been really surprised as I wire my home with Amazon devices and Apple devices, how I'm just interacting, turning lights on and off, locking the door on and off, having them play podcasts and the news, how quickly it's become part of my day-to-day routine. And banking is going to go there as well. So I think it will require all these multiple players to come together. And I think there's room for them all to be winners if they do it the right way.
Well, I think that's a great note to end on, but also a very positive note for the audience today to know that they're a part of the future, and this isn't a winner take all, but rather it seems more of a win-win-win across the board.
I would agree with that, yes. And as a technologist still in my heart, that's been a career in banking. It's still one of the best industries for the application of technology, and that's why I continue to play in this space.
Fantastic. Well, I think your positivity is fantastic, and will still a lot of beating hearts in the banking sector to hear that. So and calm some nerves. I want to thank you again, Michael. That was a fantastic conversation. Lots to think about in there. So thank you again for joining me. And to our audience, stay with us on the strategy stage, because no doubt there's a lot more coming up, picking up on some of the themes that Michael outlined.
Thank you so much. It was a pleasure to be with you today.
And don't forget to go visit Michael and the team in our expo area, so where they can share more insight. So thank you again, everyone.